As Zoom is looking to survive in a post-pandemic world, it just made a bet with Five9, which is a leading provider of AI and cloud infrastructure, in a $14.7 billion deal. Is Zoom stock a buy? Welcome back to the channel. My name's Adam, and right now we're going to be looking at Zoom stock. This is a stock that I do not own currently and do not plan on owning, but we're going to look potentially at this drop in price. It's down by about 4% today from this news. Generally, when a bigger company acquires a smaller company, the bigger company has to make a pretty good offer, and this $14.7 billion deal is more than the market cap of Five9 currently. And so generally the stock price of the bigger company tends to go down as a result, and the market cap of the smaller company tends to go up because the bigger company tends to overprice it and to give them a pretty lucrative deal for the buyout. And so Zoom is looking to survive in a post-pandemic world. And on the Zoom side of the argument is that even when people emerge from the pandemic, there still will be a lot of hybrid working conditions that will require apps like Zoom. And if you're looking at video conferencing and a hybrid work environment and having meetings online, Zoom is a number one player. It definitely has the first mover advantage when it comes to the space of online work and online meetings. And a large portion of companies say that they're considering hybrid work beyond the COVID-19 pandemic. All right, so you look at Japan, about 50% of companies, in the US, over 50% of companies, and it goes all the way to these major economies, to India, where over 75% of the companies say that they're considering hybrid work beyond the COVID-19 pandemic. So that's really good news for Zoom, and that's Zoom's argument in general. On the reverse side, you can say that people are going to be meeting in person. Celebrations are not the same on Zoom. They're much better in person, and so Zoom, as a result, will decline. Okay, and I mean, you look at the stock price of Zoom; it's nowhere near its 52-week high. Its 52-week high was like 566 or something like that. If we go over, let's just do year to date, and let's put this guy on full screen here. We can see that Zoom at one point was like $570, and it's nowhere near trading at that right now, trading at $348, again down 3.7% right now. And I mean, if you're looking for a swing play, you might want to wait until the red candles ease. You don't want to catch a falling knife if this red candle continues to produce more red candles. But right now it's looking like it's just riding the lower Bollinger Band, okay? And I don't like seeing that. And we've seen a nice run up in the past couple months from around mid-May all the way to, I mean, just like about a couple of weeks ago. And now it's sort of taking a breather. The stock is taking a breather. So it went from less than $300 all the way to $405. And now it's going back down a little bit, okay? So based off of this news, I would say that there still will be selling pressure. And what you don't want to do is, again, buy in now and then watch it continue to fall. And there's weakness in the markets overall, okay? Like the Dow is posting one of its worst days of this year, and we can see that the MACD just crossed the signal line right here in the orange, which means that the stock is officially in bearish territory. And you look at this histogram plot right here, and it again crossed the break-even line, which means that there's negative pressure on the stock. So right now, I don't think it's a good short-term deal for a swing play. And I would say, you might want to start looking at Zoom stock when it's at around $300. Just looking at the fundamentals, we're seeing that it's supposed to have 51% revenue growth in 2022. Average estimate is $4 billion, and 2023 it's expected to have 19% revenue growth. And I think that's why part of the reason why they're acquiring Five9 stock is so they can get into the cloud space and the IA space. I think this is a really good move for Zoom stock in the long term, and we're seeing impressive double-digit revenue growth. If you're looking just at the trailing and forward PE, trailing PE of 120, that's incredibly expensive, even for a stock that's growing 50% plus. I mean, it's nothing compared to something like a Tesla even right now. But having a forward PE of 74, it's just too expensive, even though it's growing a ridiculous amount. So right now, I'm not going to touch Zoom stock. I'd like it to get down to around the $300 level before I start buying in. But again, I think that the Zoom is thinking in the right direction when they're making these acquisitions. And this is an all stock deal too, which means potentially that this will dilute shareholder value currently, okay, if they're issuing more shares for this deal. So yeah, I think it's a little bit rich right now. I mean, just for a comparison, the average trailing PE in the S&P 500 right now is about a 30, I think. A forward PE is about like a 21 or something like that. So yeah, it's still pretty expensive relative to peers in the market. So yeah, but now 3.75%. I mean, I wouldn't buy this now. I would expect this to fall even below $300. And I mean, you could pick up a couple of shares now, pick up a couple of shares later if that's what you would want to do. So in terms of this deal, the value of an all stock offer is $200.18 a share based on the closing price of Zoom stock on Friday, compared with Five9's price of $177.60 on Friday, the company said in a statement Sunday. I don't know where they got this 218 cents a share, because right now the stock is worth $348 a share. So I mean, I don't know where they're getting that number from. But that's a significant discount to where they are right now. Zoom has been looking for ways to keep growing as workers begin to return to the office and students go back to school, and the deal for Five9 will help it expand, offering to its more lucrative business and enterprise clients. Five9, based in San Roman, California, makes cloud-based software that uses AI, or artificial intelligence, to help companies answer questions from customers and interact with them regardless of language, location, or device. The traditional call center, where a customer service representative responded by phone, has shifted to the internet and is now being often powered or augmented by chatbots. The market for these cloud-based customer call centers is estimated at $24 billion, according to the companies. And so they better aim to compete with the likes of Cisco Systems, RingCentral, and Amazon. So yeah, I think that this deal is definitely pretty good play for Zoom, and I think that they definitely know what they're doing when they acquired this deal. The key takeaway would be like, well, did they pay too much for this company right now, right? They said the deal was $14.7 billion. Right now, the market cap of Five9 is $12.47 billion. Even with a 4% move today, I mean, that's expected. Like, the company usually increases in price after a large deal is expected. So, it's valued at $14 billion. Who knows if Five9 is profitable? I didn't really look too much into this company. Over the past 6 months, it's up by 9%. Over the past year, this stock is up by 57%. So it has had quite a nice run up. And I mean, I expect this stock will probably stay around the $190 level until this deal goes through. But yeah, and again, like, Zoom is definitely betting that a large majority of businesses say that video communications are here to stay. Celebrations, businesses, and education were the activities survey respondents most frequently transitioned from in-person to virtual. So we'll see how sticky Zoom's business model is. I know that I still use it in my meetings as a student, despite us being able to meet in person, just because it is incredibly convenient. So I like the business model of Zoom. I like how it has the first player advantage. And I think it is a sticky business model. I think this is a good deal long term. It's just short term. I do not like the price of Zoom stock sitting at $348. I'll consider buying when it's at the $300 level. Let me know what you think about that. I would appreciate a thumbs up if you don't mind, and subscribe to my channel if you enjoy this content, where I talk about stocks, finances, my portfolio, etc. So yeah, let's get these deals, and I'll see you in the next one.